Welcome back to Brick by Brick, DC Real Estate Intelligence, the DC Real Estate Podcast, where we break down what's actually happening in the market, in your neighborhood, and at the policy level. I'm Eddie Calloway, licensed realtor in DC and Maryland, and every month I bring you a practical, ground level look at what's moving, what's building, and what you need to know if you own, rent, invest, or are thinking about buying in Washington, DC. This show is built around one idea: preparation over prediction. No hype, no hot takes, just consistent market intelligence designed to help you better understand how this city is changing. Each month, we start with the macro view, the big picture numbers across the DC market, and then we zoom into one specific zip code for a deeper neighborhood breakdown. This month's spotlight is zip code 20009, where we take a closer look at the market, the community, and the trends shaping one of Washington's most dynamic neighborhoods. This is the July 2026 edition, and we're reviewing June 2026 market data. So everything you're about to hear reflects what actually happened in the market last month. Let's get into it. Let's start with the big picture, the Washington, D.C. housing market as a whole. The headline number, the median sold price across D.C. came in at $700,000 in June, down about 3.7% from May. That's a modest pullback after a stronger spring and a reminder that month-to-month swings are normal even as the broader market holds steady. Meanwhile, the city's median estimated property value sits just under $598,000. That's up slightly from last month, but down about 0.8% from a year ago. Another sign that home values are stabilizing rather than making dramatic moves in either direction. So what does this tell us? First, inventory ticked down slightly this month, but remains well above the extremely tight inventory levels we saw during the pandemic-era market. At 5.85 months of inventory, DC remains in balanced market territory, comfortably between a seller's and a buyer's market. Second, buyers are still acting fairly decisively, though a bit less urgently than earlier this year. Homes are spending a median of 18 days on market, up from just 14 the month before, and buyers are still paying close to 98.7% of asking price. Third, pricing remains fundamentally durable despite this month's modest pullback in the median sold price. Estimated property values continue edging higher month over month, while sold to list ratios remain close to full asking price. Demand remains steady. Buyers may be a bit more patient than they were a few years ago, but they're still competing for the right inventory. Bottom line, DC remains a balanced market. Buyers have more negotiating room than they did during the pandemic-era frenzy, but well-priced, well-represented homes continue attracting strong interest. It's a healthier market than we've seen in several years, one that rewards preparation over urgency. That's the citywide picture. Now let's zoom in and take a closer look at this month's spotlight zip code, 20009. This month's spotlight is zip code 20009, centered around Adams Morgan, the U Street corridor, and parts of DuPont Circle. One of the things that makes 20009 unique is the variety of housing, neighborhoods, and lifestyles packed into one zip code. Historic row homes, pre-war condo buildings, luxury conversions, pockets of affordable housing, and some of the city's most walkable commercial corridors all exist within a relatively compact area. The headline number for 20009, the median sold price reached $718,000 in June, down slightly from May, but still comfortably above the citywide median of $700,000. Buyers continue placing a premium on location, walkability, and neighborhood amenities. At the same time, inventory sits at just 5.23 months, down nearly 10% from May and about 33% from a year ago, while median days on market fell to 13 days. That tells us this zip code is running tighter than the citywide market. Buyers continue moving quickly on well-positioned listings, and 20009 is currently operating closer to the seller's market territory on its own. So what are we seeing on the ground? Active listings continue offering buyers a wide range of choices, from entry-level studio condos to renovated row homes and larger residential properties. The median active list price currently sits around $567,000, up about 3% from last month. Recent new listings range from roughly $299,000 for a studio condo to just over $1.1 million for a larger row home, with a median price of about $662 per square foot. What's notable isn't one listing, it's the breadth of options available. Whether you're looking for a first condo, a renovated pre-war unit, or a larger row home, buyers still have meaningful inventory across multiple price points, even as the market continues to tighten. The rental market tells a similar story. Inventory ranges from smaller one-bedroom apartments to larger row homes and luxury units, giving renters a variety of options throughout the zip code. That diversity makes 2009 accessible to a broad range of residents, whether they're looking to rent today or eventually purchase in the neighborhood. Pending sales often provide the clearest picture of buyer demand. Homes that went pending in June carried a median list price of $649,000, up nearly 4% from May, suggesting buyers continue targeting well-positioned properties in the mid to upper price ranges. The broader end of month pending snapshot sits a bit lower, around $565,000, reflecting lower price listings moving quickly through the pipeline. Pending activity remains strongest among updated condos, renovated row homes, and move-in ready properties located near transit, retail, and neighborhood amenities. Even with inventory tightening, quality listings continue finding buyers quickly, with many going under contract within a couple of weeks. Closed sales in June ranged from more affordable studio and one-bedroom condos to multi-million-dollar row homes, reinforcing just how diverse the housing stock is throughout 2009. Buyers continue paying very close to asking price, with the sold-to-list ratio sitting at 98.4%. The median sold price came in at $718,000, essentially flat month over month, and still reflecting strong demand even as inventory has tightened. So what's the takeaway? The story in 2009 isn't a lack of choices, it's the best opportunities don't stay available for long. Inventory has tightened, homes are selling faster, and pricing remains firm. Together, those are signs of durable demand within this zip code. As development continues, infrastructure improves, and neighborhood amenities remain strong, those factors continue supporting demand throughout 2009. Market activity tells us what's happening today. To understand where the neighborhood is headed, we also have to look at the decisions shaping its future. That's where the neighborhood commissions come in. Before we dive in, it's worth understanding who helps shape neighborhood decisions. Much of Zip Code 2009 falls within Advisory Neighborhood Commissions 1B, 1C, and 2B. These commissions weigh in on many of the housing, transportation, development, and public space issues that affect everyday life in the neighborhood. Here's what's been happening. Housing and density remains major topics across the zip code. ANC 2B commissioners highlighted the Office of Planning's first draft of the district's new zoning map, an important step in the city's long-term planning process that will influence how neighborhoods like DuPont Circle grow in the years ahead. Meanwhile, ANC 1B continues discussing the Fair Share Housing Target Act and the One Front Door Act. The Ward 1 council member's office is also pushing for deeper affordability through the Housing Production Omnibus Act, including more housing for residents earning 30% of area median income or below. The Zoning Commission also approved an upzoning application for the district-owned site at 1617 U Street Northwest, home to Firehouse No. 9 and the 3rd District Police Headquarters, though the decision has already drawn legal challenges. Transportation continues to evolve across the zip code. DDOT reported that the U Street Performance Parking Zone is seeing its highest demand during the middle of the day rather than in the evening, and the agency is considering pricing adjustments and additional short-term parking. Bike infrastructure also remained a major topic. ANC 1B passed a resolution opposing federal efforts to remove protected bike lanes, while ANC 1C is reviewing proposed contraflow bike lanes on Biltmore Street and related traffic changes near the Embassy of Malta. Economic development remains just as active. ANC 1B continues moving the proposed U Street Business Improvement District forward and recently completed a survey on a potential new Ward 1 farmers market. Commissioners also remain active on nightlife issues, protesting license applications tied to late-night operations and noise concerns while approving updated settlement agreements for existing businesses. It's a reminder of how active and how carefully managed the nightlife economy remains in this part of the city. Beyond those issues, a few additional updates stood out. Washington Parks and People reported that roughly $14 million in federal funding has been allocated for improvements at Meridian Hill, park while community leaders continue advocating for a long-term partnership to oversee future restoration efforts. Commissioners also approved funding for alley mural projects near 9.5 Street, noted upcoming repairs to the DuPont Circle benches, and continue reviewing transportation changes near the Embassy of Malta. Bottom line, the agencies covering 2009 1B, 1C, and 2B are active on nearly every front at once. Zoning and transportation and bike infrastructure, economic development, nightlife, and public spaces. If you own property, invest, or are considering buying in 2009, these are the meetings worth following. And many of those discussions ultimately point to a bigger question. Where is 2009 headed next? To answer that, let's look at the projects, policies, and investments shaping the neighborhood's future. We've talked about today's market and the decisions being made at the neighborhood level. Now let's look ahead. If you want to understand where zip code 2009 is headed, you have to look at what's being built, what's being planned, and where public investment is being directed. Those decisions help shape not only the neighborhood's future, but also the opportunities available to buyers, investors, and residents. While housing inventory has increased and prices have begun to stabilize, investment across 2009 remains strong. Much of the current wave of development is centered on commercial to residential conversions, adaptive reuse, and public space improvements, alongside continued efforts to expand affordable housing. Looking ahead, several projects stand out. The Geneva, formerly known as the Universal Buildings, is one of the largest office to residential conversions currently underway in D.C. The Post Brothers redevelopment will transform outdated office space along Connecticut Avenue into 532 new apartments. In Adams Morgan, Jubilee Housing recently completed Ontario Place, bringing 52 deeply affordable apartments online with the district's first affordable housing-based aquaponics farm. Nearby, a proposed 31-unit residential building at 2009 18th Street Northwest continues through pre-construction, while farther north, plans are advancing for an approximately 90-unit condominium development surrounding the historic mansion at 3224 16th Street Northwest. Public investment is also reshaping the neighborhood. DDOT's Connecticut's Avenue Deckover and Streetscape project will create a new pedestrian plaza while adding protected bike lanes, upgraded sidewalks, and improved accessibility around DuPont Circle. Although construction will continue bringing periodic lane closures and detours, is one of the most significant public space investments affecting this zip code. Elsewhere, the DC Plug initiative continues moving electrical infrastructure underground to improve grid reliability, while Pave DC is resurfacing roads, sidewalks, and alleyways throughout the area. On the policy side, zoning and housing affordability remain front and center. The DC Zoning Commission recently approved significant updates to the district's alley lot regulations, making it easier to create new housing opportunities on many alley lots that were previously difficult or impractical to develop. The changes are intended to encourage more infill housing while maintaining neighborhood compatibility. At the same time, the district continues administering its inclusionary zoning program, helping expand affordable housing options as new residential projects move forward. Taken together, these projects tell a bigger story. Rather than expanding outward, much of 2009's next phase of growth is coming from reimagining existing buildings, underused properties, and public spaces. That's important because it creates new housing opportunities while preserving the character of one of DC's most established neighborhoods. For buyers, investors, and residents, the question isn't whether growth is happening, it's how that growth is taking shape. New housing continues to move forward, infrastructure is being upgraded, and investment remains focused on making better use of existing land. It's an approach that is likely to shape the future of 2009 for years to come. But growth isn't measured only in housing units and infrastructure projects. It's also reflected in the businesses, restaurants, and gathering places that give a neighborhood its identity. A neighborhood is more than its housing. It's the places people gather, the businesses they support, and the experiences that bring the community together. That's where 2009 continues to distinguish itself. The neighborhood's dining scene continues to evolve while remaining anchored by longtime favorites. One of the newest additions is Kathmandu, DC, along the U Street corridor, bringing Himalayan cuisine and craft cocktails to one of the area's busiest restaurant districts. At the same time, neighborhood staples like Madame's Organ continue to draw in crowds with live music that has become part of Adams Morgan's identity for decades. Beyond dining, everyday life in 2009 is shaped by its walkable commercial corridors and active public spaces. The U Street and 18th Street corridors remain lined with independent restaurants, coffee shops, local retailers, fitness studios, and neighborhood businesses that keep activity flowing well beyond the traditional workday. Those streets continue to serve not just as destinations, but as gathering places for residents and visitors alike. The neighborhood also offers a strong sense of community through its public spaces and events. Meridian Hill, also known as Malcolm X Park, remains one of the district's most recognizable parks, hosting its long-standing Sunday Drum Circle while providing green space in the middle of the city. Annual events like Adams Morgan Day and Neighborhood Porch Fest continue bringing residents, local businesses, artists, and musicians together throughout the year. Taken together, these experiences have defined life in 2009. New businesses continue opening alongside neighborhood institutions, public spaces remain active, and community events keep people connected. That combination supports local businesses, encourages neighborhood engagement, and helps explain why 2009 continues to see steady interest from residents, visitors, and investors alike. And in many ways, that brings us back to the bigger picture. Let me leave you with this. 2009 is a neighborhood that's continuing to evolve. The market remains resilient, with inventory tightening, buyers continuing to compete for well-positioned homes, and investment focused on making better use of existing buildings, public spaces, and underutilized land. At the same time, neighborhood leaders continue shaping the future through planning, infrastructure improvements, and housing policy. What hasn't changed is what draws people here in the first place: walkability, neighborhood character, active commercial corridors, public spaces, local businesses, and convenient access to the rest of DC. That's why understanding a neighborhood requires more than just looking at home prices. You have to understand what's being built, what's being debated, and what people actually experience when they live there. Whether you're buying, selling, investing, renting, or simply trying to stay informed, remember, preparation over prediction. That's why I'm here. If you're thinking about making a move in DC, reach out. I'm Eddie Calloway, and I'm happy to help. Until next time, build smart, brick by brick.